Hello, hi. Today, I'd like to share with you a bit about what are the procedures and the documents that you see when you have a housing loan and you want to pay back your housing loans. What are the first steps that you need to work on, i.e., to find out your outstanding balance to pay back the banks, and generally how the banks uh, calculate or compute the interest and the principal portion um, when you want to pay back. I've heard during my practice uh, many people's experiences. Like for example, they applied for 100,000 loan, and they they applied for the loan for 20 years, and they have actually uh, pay out 5 years, and there's still a tenure remaining of 15 years. And they thought that their loan principal would have reduced by a quarter, 25%, because they have done 5 years. So it should be 75,000, which is not the case because the the way the interests are computed is the balance should be still within the range of 90K. So of course, the borrower or the customer or us applying for the loan would be surprising. Hey, I paid a quarter of the tenure and should be a quarter less, but it doesn't work that way. Just wanted to show you a chart on how the it works, which is okay. If you look at the term loan repayment, how the chart actually works is like this. This is a very good example. You pay a fixed payment of, let's say, 950 or 1,000. If you look at the first 5 years, you can see the interest portion is actually 700 plus, and your principal payment is 200 plus, which is actually just a quarter. But when it hits the inflection point where it crosses off is at year 10, where you start to see that you see at year 20, you're still paying the same amount, 1,000, but your the principal portion is about 900, and your loan portion is 100, the 300 plus. So you can see actually, even though the base in Malaysia, we use the word base rate, which hovers within the base rate plus spread, which hovers between usually 2.9% to 3 plus. Some people with low credit scores get about 4%. So this is actually how it works. I just wanted to discuss a bit about the base rate. Okay, this is generally the base rate on most of the banks, and then the spread usually the lowest you can get if you're like a VIP client or whatever, they'll give you a plus 0.6. That's the lowest. Plus 0.5 is possible as well for really big profile clients. But generally for us, it'll be plus 0.6 to 0.7. So your end amount for your loans would be in the range of 2.39 plus 0.6 will be at about 3%. So you can see that Maybank is a bit lower. So I think this is updated a bit, not so recent. It shouldn't be much different. We should be around 2.27 range as well, or 2.3. So this is for UOB Bank 2.61. So there is something called the Islamic loan as well, but I will not talk about it this time. So what is the meaning of base rate? Base rate is actually an interest rate that the bank refers to before it decides on the interest rate to apply to your home loan. And of course, then they'll add the spread. So you end up to about 3.3%. Actually, today I'd like to share with you a bit about the meaning of redemption statement. When you want to pay off the loan, there are two types of redemption statement. It's always forward-looking redemption statements, whereby they give you, let's say you apply, your dates of application is November. They will give you the next 3 months, the December month, the January month, and the February month. They will compute. Yeah, so that's assuming that you have not paid for you stop paying from November onwards. So you can see that it's slightly 300 more, 300 ringgit more. So this is the accurate computation on the balance amount that you owe to the bank, less the legal fees that they need to do, where you need to appoint a lawyer to do the conversion. I mean, um, to get the banks to release them from all the rights they have on the property, because you're actually taking away you're going to be in cash position the property. The other type, which is a much simpler one, you see, if you apply, let's say in October, they'll just give you a future 3 months ahead date, 660. So you can pay in December or beginning of January. um, and if you pay 660, and if you do pay your monthly installment as well in November and December, and at the same time you made this amount 660, there will be a balance surplus that will be credited to your loan account, loan bank account, loan current account, which usually after you pay off the bank, you will need to uh, what do you call it? You need to close the account as well, because you have that bank account. I mean, you can keep it. There's no obligation for you to close it. So there should be a positive balance in the loan account as well. This loan account is the one that usually you bank into for the bank to uh, take off to pay off the loans. So yeah, that's all for today about redemption statements, how you pay off banks, and what is base rates and all that. Thank you.